Right. Good morning, everyone. Good morning. We are so excited that you're here to join us for our Home Buying 101 workshop. And today we have a really great lineup for you guys, giving you out all the information you need so that you're in position to purchase your first home. So I just want to introduce each of our presenters today and give them a second just to say hello. And then we'll go ahead and jump right in with our workshop. So, first up, we have the lovely Miss Kelly Stevenson. She is a loan officer with Atlantic Bay Mortgage. Kelly, you want to say hi?
Hello, everybody. I hope you're having a great Saturday. It's nice and beautiful outside, but I don't know how it actually feels. But, anyways, we can dream.
Awesome. Next up, we have Miss Kendra Thompson. She is a agent with Keller Williams. Say good
Good
morning.
morning. Good morning, everybody. My name is Kendra Thompson. I am a realtor with Keller Williams, and I am so glad that I have the opportunity to educate you guys on the home buying process.
All right, and last but certainly not least, we're going to have Mr. Ethelbert Johnson. He is a title examiner. That's the person that makes sure that you get everything free clear with your transaction. Also, a really deal. So we have a great workshop. We're going to go ahead and jump right on in. As you guys know, I am CPA, and a lot of people to buy a home. I'm the first person that you're going to start with. And the reason why is because your credit is one of the main things that you have to have in place in order to get the financing for your home. Now, please understand me when we say you can purchase a home without credit if you have enough cash. If you have a large sum of money and you want to buy a house, you don't need your credit. But if you don't have all that money and you want to finance it, then you're going to need to make sure your credit is in place. And so today, I just want to educate you guys on what is a credit score. So, a credit score was derived by the Fair Isaac Company years ago as a standardized way to make lending fair to everyone because no one can know what you look like off of your credit report. Sometimes people used to get discriminated upon and they weren't able to get credit. And so the Fair Isaac Company came up with this model called the FICO score. Okay, now a lot of lenders all across the country use this in order to determine your credit worthiness. And how they find your score is through the credit bureaus. Okay, now there's three credit bureaus, and if you guys don't have anything to write down, I suggest you please get a pen and paper very quickly because we're going to have a lot of great information, and I don't want you to miss out on anything. So get you a pen and paper and let's write this down. Okay, so there are three major credit bureaus. Okay, we have TransUnion, Equifax, and Experian. Those are the three major credit bureaus. Now, this might blow your mind. Actually, over other credit bureaus out there. Yes, and they are smaller credit bureaus, but you might have heard of a few of the most popular ones like Innovis, SageStream, LexisNexis. Those are some other ones that are popular as well because they furnish a lot of the you know, judgment data, and that falls under your credit records. Now, the credit bureaus furnish your score, and with them furnishing your score, they're going to give it to the lenders. And the lenders are going to look at it and they're going to say, okay, this person's score is, a 500. I don't necessarily lend money to them. They might be more risky. Opposed to, here's another person over here, their score is a 700. This person seems like they might be more trustworthy. And how that determination factor works. Now, with each transaction that you're looking to do, there is a different score that you need to have. you're looking at purchasing a home, you want to have a minimum of at least a 20. Some lenders might require a 640 or a 680, just depending on the type of loan that you're looking to get. And we'll let Kelly explain those different loans in a moment. But I just want you to understand, when you're looking to buy a home, you don't have to have a perfect credit score. You just want to make sure that your score is high enough to meet the lender's requirements. So the next part is, what makes up your credit score? There's 5 things that are going to determine your score. And the first thing, write this down, is your payment history. Okay? Your payment history is 35% of overall score. So if you pay all your bills on time, that is a great way to make sure that you're getting a lot of points, making those payments on time. Okay? The second part is going to be your, what do you call it? Utilization, some people say, or also your capacity or amount owed. That's 30% of your score, okay? So you have 35 in history, 30% how you use your credit. That simply means if you have, let's say, $1,000 in open credit, you want to make sure that you're not using more than a percent of that every month that's stand on your balance, your statement. You know, if you go over the percent, then your score is down. And this be some good insight for people who have a great payment history. However, their score is still not as high as it should be. So with that being said, you want to make sure that not only are you paying your stuff on time, but you're also keeping all of your balance under 30%. Okay? The next largest part of your credit is your length of credit history. That's 15%. So that comes into how long you've had credit and how many new account add to your profile. Every new account, you're going to re-average your length of credit history, and it's going to slightly, shorten it. So just be mindful not to add in a lot of new accounts that are not necessary. If you're in the beginning stages and you're looking to build credit, then awesome. But if you got some trade lines and you've had credit for a while, then you don't necessarily want to add accounts in that you don't need. So let's go back and recap. 35% history, 30% capacity or amount owed, utilization, how you use your credit. They all mean the same thing. 15% length of credit history. And then your last 2 sections of your credit score are equal. They're both 10%. You have your inquiries, and that's simply when someone is checking your credit to see if they want to give you their money. So anytime you have someone look at your credit report to determine credit worthiness, guess what? That's going to be an inquiry. That's going to be a hard pull on your credit. And it's going to show up on your report, and it's going to make you drop a couple of points. Okay? Now you have soft inquiries. That's when you check your credit yourself through like Credit Karma or NerdWallet, Credit Sesame. Even with your bank, sometimes opportunity for you to see your or whatever. All those things are soft and cost you any point, and you can easily, use that as like an indicator to see what's going on with your score. Now, the last part is your credit mix. Okay, credit mix is a mixture of revolving and installment accounts. Now, I'm sure you might be wondering, what does that mean? Well, a revolving account is when it never ends. As long as you keep your payments on time and you don't max out that particular credit line, guess what? It's going to continuously revolve around, and you don't have to worry about it ending. Okay, as long as you don't max it out and as long as you keep those payments on time. With an installment account, however, it has a specific duration of time. Once that time is up, as long as you haven't missed any payments, then it's finished. So that's normally going to be like an auto loan or some kind of personal loan, even a secure installment loan. You can do that as well. So you're basically taking a loan out against yourself and then paying the money back over a specified amount of time. And that's the way that you can build your credit. So those are the 5 things, guys, that make up your credit score. And that is what's going to determine how high or how low your score is. So I'll say them one more time. 35% is going to be your payment history, 30% utilization, 15% length of credit history, 10% inquiries, and then 10% credit mixture. So that's my moment for you for credit. Helping you get in position to purchase your first home is very exciting because the interest rates are so low right now, guys. And if you have ever thought about purchasing a home, this is a really good time to do it. And getting your credit intact, it's something that can be overwhelming, but guess what? It's so worth it. And just applying those 5 things that we shared, just understanding what they are and keeping a watch on them, making sure you're paying your things on time, you're not overspending, you're not applying for new accounts, that can help you get in position to purchase your, first home or your second home. So with that being said, after you have your credit together, the next thing that you're going to need to do is you're going to need to get your financing, okay? And so with your financing, you're going to have to go to a mortgage company. And I'm going to let Kelly take it over, and she's going to explain to you that process.
Okay. Thank you, Serena. All right. So like Serena said, the first step is finding the right lender. And a lot of people will kind of go back and forth as to whether they should go to a mortgage company first or should they go to a real estate agent first. And there's no right or wrong answer to that, because you may want to go to a real estate agent to get a referral to a mortgage lender if you have no idea, who to use or who you can trust. So that's a good idea. But I will say that it's very important to take care of your finances first before you ask to go out and see this house or that house. You don't want to get excited about a house that you could potentially not qualify for. So basically, it's just take care of your business first, as in all things, and then you can kind of play and go shopping and have the fun with looking at homes. Because this, and also as far as choosing a lender, this, you have to think, this is one of the biggest investments that you're going to make. There's more money on the line than in any other purchase that you'll probably have. So you want to be comfortable with someone, and communication is one of the most important things. When you call to check on the process of your loan, you don't want to be handed off to this person or that person. You kind of want to have one point of contact. And that's why I love the company that I'm with, Atlantic Bay. I have a team, but I'm your point of contact. And you can pretty much reach me if I don't respond right away. It'll be within 24 hours. And if there's a question I don't know the answer to, I'll just let you know, like I'm doing research and I'm, trying to find out the right answer for you, and I'll get back to you. So I definitely will not leave you if you have a question. All right. Yes. Okay, so let's talk about being approved. One of the things that we do at my company is we will conditionally approve you. So basically that means before you find a house, I'll ask you to turn in your documentation, things like pay statements, bank statements, copy of your driver's license. You'll turn all of that into me, and then I will give it to our underwriter. The underwriter is the person who makes the final decision on your file. So I'll give it to the underwriter. Takes about 3 to 5 business days for them to look over your paperwork and approve your file if all is well. And if not, they'll come back to me and say, "Hey, Kelly, I need this," and then I'll come to you and ask you for whatever paperwork that I need. With the whole purpose is just to get you approved. And when you're approved, and this is before you find a house. So now you get that approval. Let's say you're approved for 250,000. So you will tell your real estate agent, and I'll be in contact with your real estate agent. And you go out and you'll find a house. If you find a house that you like, I'll give them a letter. And a lot of times the seller's real estate agent will reach out to me and say, Kelly, how is your client? Is your client approved? How does their file look? And one huge benefit is that I can say that the underwriter has already reviewed their file and they're approved by an underwriter. A lot of people aren't approved by an underwriter. That's the strongest approval that you can have. So in this market where there's a lot of competition for one house, you do want to be conditionally approved because it helps you to get the home that you want. Right. Let's see. Okay. And so before you're conditionally approved, I'll take an application, which is basically just general information. I'll ask you like, where are you working? I'll ask you things like who will be on the loan? How long have you worked there? Just basic questions. And this is just the first part of our process. It doesn't mean that you're approved. It's just me collecting your information. And then after I get the information, I'll put everything into the system. And at that point, I will know which documents that I'll need from you. And that's when I email you the list of documents that I'll need. Okay, so different loan programs. We have conventional loans, there's FHA loans, USDA loans, VA loans, and there's also Virginia housing loans, also known as VHDA loans. And I'll kind of touch on those, a little bit of each of those. So with conventional loans, you'll usually have a stricter qualifying criteria, such as higher credit scores. But conventional loans usually tend to have more favorable terms, like lower interest rates. And it's usually a 3 or a 5% down payment. FHA loans are 3.5% down payment. And the VHDA loans, and honestly, those are the ones that I do most often, are the ones where I can set it up. For example, if you have a $100,000 house, with a regular FHA loan, you'd have to pay $3,500 down payment. That's 3.5% of that purchase price. So with the VHDA FHA loan, instead of paying the $3,500, we will kind of take that away and it'll be included in your mortgage payment over the life of the loan. So instead of paying that upfront thousands of dollars, you may have $5 or $10 extra included in your mortgage payment. So that way you do not have to worry about coming up with a huge down payment. And also with the Virginia housing loans, if you need help with closing cost assistance, you can move around, play around with the interest rate. For example, I think last week, if you had maybe a 3.375, then on a $100,000 home, the lender can give you $2,000 to go towards closing costs. So it helps in this type of market where it's competitive. A lot of people are bidding for the same house. At least with this type of loan, first time home buyer loan, you know that you don't have to worry about the down payment, and you know that we can help you out with closing costs. All right. Okay, and as far as credit scores, I'm not going to get into that too much because Serena is the expert, but I will say that we need a 640 middle score. So out of your Equifax, Experian, and TransUnion, your middle score needs to be a 640 in order to do any loan at my company. And a lot of times, I think Serena probably talked about it a little bit, but a lot of times you'll see Credit Karma, and a lot of people will come to me and say like, well, I already know my scores. Credit Karma has my score as a 620. But I will say 95% of the time, Credit Karma is going to be different than what a mortgage lender will pull. Mortgage lenders will pull the same thing. If you come to me, if you go to, a bank, we all will pull the same score, the mortgage lender. But if you look at Credit Karma, if you go buy a car, if you look at your credit card statement, all those scores are going to be different. Mortgage scores have a different scoring methodology. And basically, it's because if you think about it, with a mortgage, you're buying a house for hundreds of thousands of dollars. And then with a credit card, you may be getting a credit card for 5,000 or a car for 20,000. But the mortgage criteria is stricter because there's a lot more money involved. So sometimes those negative things on the credit report may have more weight than just like a credit card if you're applying for a credit card. And one thing though that my company can do, because a lot of people have a little anxiety about having their credit pulled. They don't want a credit pull to drop their score. So my company can do a soft pull, but it's not the soft pull you think of. It's a soft pull that will not drop your score at all, and it won't even show up as an inquiry. It basically will give me Equifax and Experian, and it'll show me those scores, and that's enough for me to kind of know if you qualify or not. Oh, and another thing we can do is a rapid rescore. So for example, let's say we require a 640, and let's say you have a 630. So sometimes on the credit report, it will tell me exactly what you need to do to get to a 640 within, I'll say 90% accuracy. So it may say, pay down this credit card $200. And so if you pay down that credit card $200, show me proof that you paid it down, bring it back to me, and then I'll send it to our credit vendor, and they can update your credit score in about 5 business days, and then you should have that 640 or higher credit score. Great. Okay, and then what makes up a mortgage payment? You have your principal, that's the sales price of the home minus any down payment. You have your interest, that is paid to the lender for borrowing from them. And in the early life of your mortgage, the majority of your mortgage payment is going to consist of the interest payment. You have property taxes, that is usually rolled into your mortgage, and then you have insurance. Sometimes you have flood insurance. It depends on where your house is located, and your lender, I can tell you if your house is in a flood zone. You'll have mortgage insurance on conventional loans until you have 20% equity in your property. And then you'll have mortgage insurance on FHA loans for the life of the loan. And then there's also homeowners insurance. All right, other aspects of the home buying process, you have your appraisal, and basically the appraiser goes out to the property to tell you how much the house that you're going to buy is valued at. We can do a loan up to the cost of the appraisal, and that's all. So if the house doesn't appraise for what you offered, you probably have to go back to the seller, your real estate agent, go back to the seller and try to negotiate so that you can come up with a better solution. There's a title search to help uncover if there are any issues or debts against the property. The closing, that basically transfers ownership from the seller to you. There's a home inspection, and every house should be inspected, in my opinion, before you purchase, because that's a lot of money involved. And if you can get it in home inspection, please get one. And then there's a final walkthrough. This is your opportunity to ensure all agreed upon repairs have been made. Okay, so the first step, like I said, is to get in touch with your lender. You want to make sure that you have your finances straight, taking care of your business, and know how much you're going to be approved for before you go searching for a home. And you would call me, and then I would take an application. I can take it over the phone, or you can apply online. I would ask you for documents. Again, I would send all your documents to our underwriter. In 3 to 5 days, you'd be approved, and then you'd be free to shop and on your way to Miss Kendra. So that's my introduction to Kendra. Thank you.
Day. A buyer's consultation. In that buyer's consultation, we're, getting acquainted. I'm getting your needs, what you're looking for in a home. So when that time comes for us to actually go out and shop for the home, I'll know exactly what you're looking for. So we're going to go over different documentation. I'm going to have what's called a CDIF, the Consumer Disclosure Information Form. With that form, it pretty much tells you it's a buyer beware state. Virginia is a buyer beware state, meaning you have to do your due diligence when it comes to looking at properties. So this 6-page long disclosure form is going to let you know everything that you need to be aware of as a buyer, and we're going to go through it page by page when we're actually sitting down having our buyer consultation. So from there, we're going to get your pre-approval letter. We're going to make sure that you're approved for whatever house that you want to see. After you speak with Kelly, then you come and talk to me once you have your pre-approval letter. I have your criteria, so we can then go out and start shopping for homes. If you don't have your pre-approval letter, then I'm going to send you to Kelly, and then you guys can go through that whole process that she just spoke about. So once we have our pre-approval letter, we can then go out there, start shopping for homes, whether it's a 4-bedroom, three bathroom house with a big yard. I have your criteria, so I'm able to look at the multiple listing service or the MLS, which has all the homes that are on the market currently for sale, that are pending, that have sold. So I'll be able to see everything that you're looking for. So let's say we're home shopping and we finally come across the house that you've been dreaming of. So we're gonna, look at the property. We're looking around. You finally decide this is it. I want to put an offer. I get in touch with the listing agent. We put in an offer. I then kind of negotiate, and this is the key. This is key, and this is why you need me as your realtor, because I can then speak with the listing agent to see what items or what's really important to the seller. What are they looking for in a buyer? Do they expect them to pay their own closing costs? Right now, actually, I should say it is a seller's market, so it's pretty tough out there. I don't want to discourage you because this is a good time to buy. However, there isn't a lot of inventory depending on what your price range is. So the way the market is set up now, you have to come with your highest and best. Not in all situations, I don't want to scare anybody off, but right now it is a seller's market. So there's not a lot of houses on the market, meaning as soon as the house pops up on the multiple listing service, there are a flood of buyers going to see this house. So we have to come with our highest and best offer. A lot of sellers now are looking for you to possibly pay your own closing costs. It depends on, the situation. Everything is negotiable. So, possibly pay your own closing costs to, and it all depends too. Like if it's a multiple offer situation, there's different things that play into that. But you need me as your realtor to be able to go in there and negotiate with the listing agent the best deal for you as the buyer and as a seller, because we do want it to be a win-win situation, meaning the seller's getting something out of it and the buyer's getting something out of it as well. So we put in an offer on the house that you like. The seller could do one of 3 things. They can either accept your offer, which means they agree to all the terms that are in the contract, or they could counter. And counter simply just means that they don't necessarily agree with everything, and they're going to kind of just bounce the offer back to you to see if something could be worked out. For example, let's say the seller needs to close in 45 days versus 30 days, but you want a 30-day closing, we can kind of negotiate. Maybe we'll close in 40 days versus 45. So we kind of see what works for both parties and take it from there. So that's a counter. Or they can actually flat out reject your offer, meaning they don't like this offer or whatever the case may be. Maybe it's just not as enticing as another offer. They'll reject it. But a lot of times the seller will counter back, so we can kind of work things out so we can both get to the closing table. So once the seller accepts your offer, we are in a ratified contract, meaning the buyer and the seller both came to an agreement as to the terms of the contract. So we have a ratified contract. Now, oh, I did mean to mention, with this offer, we're going to present the purchase agreement, which is the offer, along with your EMD. That is the EMD is the earnest money deposit. You're going to need between $500 and $1,000 to put with this offer. It's kind of like saying, okay, I'm really serious about this offer. Here is my earnest money, saying I really want this house. So we're going to have the purchase agreement. We're going to have your EMD, and we're going to present the pre-approval letter in a packet to the listing agent to give to the seller. So once we're approved, or once we're in a ratified contract, we then move on to the inspection phase. We are going to have a home inspection, and I recommend to all of my buyers to get a home inspection because you want to be able to protect your investment. This is one of the biggest purchases you're going to be making in your life, and you want to protect it. You want to protect your investment. So you want to know what's going on from, the crawl space, whether it's debris or whatever's in the crawl space, to the electrical panel. You want to make sure the electrical is sound, the plumbing is sound. You want to make sure the roof is sound. You don't have like a leaky roof and it's not going to fall through, or to make sure that there's no squirrels in the attic. The inspector is going to go through the whole house and give you a full report of everything that's going on in that house. So once we get back the home inspection report, we can then negotiate with the seller what items they're going to fix. So let's say the electrical wiring isn't right, or there's a leaky faucet, or the shower is leaking, or there is a squirrel in the attic, or the roof doesn't look very sound. We can negotiate all of that. Or which items are most important to you. We can look at cosmetic as well. However, I do try to let my buyers know we want to focus on the things that are most important, especially in this market right now. It's a seller's market, so they're being really picky as to the things that they're going to fix. But like I said, everything is negotiable. So once we get back the property inspection contingency report, and that's ratified, we come to an agreement as to what they're going to fix. We then move on to the appraisal phase. The appraiser, he's going to go out there and he's going to make sure that this house appraises for what the offer that we put in. We want to make sure that this house is worth this amount. So that's the purpose of the appraiser. So he's going to go out there. So let's say we put in an offer of $250,000. And the appraisal comes back at $260,000. Who knows what that means? Exactly. That means you walk in with $10,000 equity. That's the amount of money that you now have in your home. So that's what we're looking for. A lot of times we want the equity in our home. So another thing on the flip side, let's say, you put in a $250,000 offer, but the home only appraises for $245,000. Who knows what that means? Exactly. That means that the house is not worth that amount. So we're going to negotiate with the seller for us to come down to that appraised price, because no one wants to pay more than what the home is worth. So now we are past the appraisal. We get through that part. Now we come to the final inspection, or the final walkthrough. We normally do the final walkthrough 3 to 5 days before closing, because in case we find anything, we want to give the seller enough time to remediate those things. So in the final walkthrough, I have a checklist that we're going to go through. We're turning on all the lights to make sure they work. Make sure you bring your your charger outlet, because we're checking each and every single outlet to make sure that they work. We're turning on all the water. We're running the dishwasher. We're running the shower. We're running the tub. We're flushing toilets because we want to make sure that everything is sound. We're turning on the fan. We want to make sure everything is looking good and it's in perfect working condition before you move in the next few days. So if we do find anything on there, we're going to let the seller know so they can have it fixed before you actually move in, and we're going to get proof of that. We're going to get proof that they actually fixed it, and if need be, we'll go back and check to see if those things were done. Also, we have the PICRA, which is the Property Inspection Contingency Report. We want to make sure that those items that they said they were going to fix in the property inspection, that they have indeed done those things. So that squirrel that was living in the attic and with that nest, got to make sure that's out of there. We're checking the roof. If we negotiated for a new roof, we're going to make sure that the roof has been completed and that we actually have receipts, actual receipts that the roof was done. So yeah, we're going to make sure all those things were done. And from there, we have the final walkthrough. I'm sorry, not the final walkthrough. We have closing. We have worked so hard from working with Serena, getting your credit together, from going to Kelly to getting that pre-approval letter. And I'm sorry I did not mention Bert for title, because you want to get your title done as well. All the way up until the closing table, all those things, it takes time. It's an emotional process. So I'm there to help you, walk you through the whole process, explain it over and over if I need to. This is a really big moment. And once we get to closing, it's a celebratory moment. We're taking pictures, you're signing the last bit of documents, and you get your keys, the most important thing. So this is a really exciting moment, and you definitely need me as your realtor to go through this whole process with you so you can get the full experience. And that's all I have for now. If you guys have any questions, just give me a call or send me an email so you can get on my schedule for our buyer's consultation and take it from there. Thank you so much, guys. Anyone there?
Good morning, everyone. And we kind of skipped me on the introduction, but as Serena stated, my name is Ethelbert Johnson. I am a title examiner, and I am also a licensed real estate agent. So I work with clients in multiple phases within this process. For the most part, my experience comes from being a title examiner, and that means I go back and I look at the effects of the things that are on title, such as liens, easements, and other things known as encumbrances. This report is done during the due diligence period of the home buying process. So, as Ms. Kendra just alluded to in her presentation, this component of your purchasing process occurs as your attorney orders a report from me. I prepare the report, and they create what's called a binder, and they issue a title insurance policy through one of the major insurance policy issuers, such as First American, We have Over Public Title, Fidelity National, and also Westcor. There's quite a few of them. Um, but what title insurance offers? Title insurance offers financial protection against title problems that might not be found in the public records. Um, these items are inadvertently missed in the title search process because they may have not even been reported. Somebody might have a right to access your land in a way that you didn't know about. Somebody may have had a judgment against them that they were unaware of, and when they conveyed the title, or maybe they were even aware of it and they expected you not to get it. So there are quite a few conditions that exist to make things adverse to the potential buyer of real estate. Types of title insurance include the lender's policy. The lender's policy only protect the lending company or the mortgage company. The lender's policy is always going to be required whenever there's a mortgage in place. They're always going to require that you have a policy to protect their interests in the property. And when you're buying the property, there's also an option for you to purchase owner's protection or owner's policy at the time that you convey the property over to you. Now, the reason why this is very important is because you may think, oh, well, I bought insurance, so I'm covered. And someone is covered. Yes, you did buy insurance. However, you might not be the party that's covered. So you might go out, purchase a home, get a mortgage, protect the mortgage company, and then you lose your investment 5 years down the line. You lose everything that you and your family, everything that you tried to provide for your family in the course of purchasing your home. So these are the types of things that you want to make sure that you're protected from. So you do your due diligence and make sure that you protect yourself. Make sure that the property is owned free and clear. At the end, you want to make sure that everything is satisfied prior to you taking possession of the property. You want to make sure that all the mortgages that were on the property are accounted for and paid off. You want to make sure if someone had something such as a line of credit that's attached to the house is paid off. And you also want to make sure perhaps maybe there was a hospital bill or something that may have had a judgment which attaches to the property as well. So you want to make sure those things are taken care of and not taken care of out of your pocket. You want to make sure that you have protection just in case somebody does try to come after you for owner XYZ's debt from 10 years ago. You want to make sure that you have protection in place, because there's also a lot of things that we don't see that happens because of these types of engagements, such as foreclosures. You know, if there was a mortgage that was owed on the property that you were unaware of, it goes 10 months being delinquent, and a year after you purchase a house, someone's sending you a notice saying, hey, Mr. Jones, this mortgage wasn't paid and we want our money. Or you don't have an extra $100,000 sitting around, so we're just going to go ahead and foreclose on the house. Nobody wants that. We don't want that. I personally don't want that to happen to one of my clients. So I'm going to make sure that I do my work to the best of my ability to make sure that there's no clouds on your title. There's nothing left on title that's going to affect you adversely. And also, I always like to mention that there's a very famous motivational speaker named Les Brown, and he speaks of a story where he purchased his mother a house. This was like what he assumed to be her dream house. This was everything that they wanted. They moved into the house. He got a great deal on it, and all the while he had been swindled by the previous owner. The previous owner had made him believe, hey, look, the house is free and clear. This is a great deal for you. I need this to happen right now. And he went off of that and he went on through the transaction and found out that there was a lien on the house, and he ended up losing the house shortly after purchasing it. So he invested all of this money that he spent this extremely long amount of time saving into purchasing this house for he and his mother, which he thought it was a dream come true. And in actuality, it turned out to be a nightmare because he lost everything that he invested. Which that happens a lot more often than you might want to believe, but it happens to a lot of people. It happens right here in the 7 cities and all over the United States. So we want to be aware of these things. Take your time in the home buying process. You know, we're here. We're the professionals for you guys to lean on. And we want to be that. We want to be able to give you sound advice. And at the times where we don't have, hey, the exact right information, or we're not the right resource, such as in some of these things, you may need to consult an attorney. So we want to make sure that we're pointing you in the right direction of those professionals that can also help you in case you're going through one of these situations. And that's my presentation. Thank you guys for joining us. Hey, everybody's back. Miss Kelly,
Yep.
Miss Kendra.
Okay, guys.
There she go.
So, yes, we are all back. So that was just a powerful presentation, and we do have some people putting in questions. So I'm gonna assume this is for Kelly. Miss Candace would like to know about the different types of loan programs that are available right now.
Okay, so we have a conventional loan. Usually this is 3 or 5% down, depends upon your income. We have FHA loans. Those are 3.5% down payment. There's USDA loans. Those are usually in rural areas, country type, like Isle of Wight County. And there's no down payment with the USDA loans. And we have Virginia housing loans. Those can be Virginia housing conventional or Virginia housing FHA loans. Those are for first-time home buyers. The majority is for first-time home buyers. You can also get them as if you've owned a home before. But for the first-time home buyer loan, we structure it so there's no down payment, and we can also play around with the loan to help you with closing costs. And of course, there's VA loans. I'm a veteran myself, so I've taken advantage of the VA loan. Those no down payment with the VA loan. There's no mortgage insurance with the VA loan. They're awesome loans, and that's about the majority of the loans that are on the market right now.
Just playing around with the different settings.
Look, full disclaimer, guys. We are definitely learning as we go, but that's okay. All this new technology is awesome, and it definitely is exciting. So I just want everybody watching to know, look, it's not about having it all together. Just get started, and as you move along, you'll get it perfected. But do not have it. Don't let not having it all together stop you from getting started. Find somebody that knows more than you. Do we have any other questions out there? Okay, if a person receives SSI, how can their loan be protected from the government?
If a person receives, how can their loan be protected from the government? Candace, you may need to call me on that one, unless I don't totally understand.
Maybe she may be speaking about, maybe when you get SSI, you qualify for like Medicaid and things like that, and then I
She
know
said
that
after
sometimes
death.
they will, after death, after the person dies, they got SSI, and if they've gotten like kind of medical assistance, the state will try to take the property a lot of times because they will say that basically that's the repayment for the person that they took care of. So I think she's asking, how can you get around something like that? Like if, let's say, for instance, if you are taking care of your mother and she's on SSI and she has a house in her name, and then she ends up getting, let's say, medical assistance, and then she goes assisted living or long term care, she dies. At that point in time, for what I understand, the state would have paid for her long-term care. So when she dies, that house becomes like theirs or a portion of, the state to repay for the money that they take care of that person. Is that what okay, she said yes, that's what she's asking.
I think for that case, I think she
So
needs
do
to
you have,
consult with an attorney regarding putting together a living trust or a revocable trust. I think that's the kind of information she's looking for in that.
okay, yeah, I think so too, Candace. I think that information would be better handled with a real estate attorney. And I do have one that I work with all the time. I'll see maybe if next time we can get them on the workshop, because those sorts of questions are definitely issues that, we want to make sure we're giving resources for. Do you have any insight into it, Kelly?
No, I think what Bert said
Real estate attorney.
answers the question.
Yeah, because for the most part, once they convey into that trust, that protects the real asset from a lot of different encumbrances and things because they'll own it in a trustee's capacity and not so much in their own individual capacity. So it's like, this person may pass away or whatever the case may be. However, that property is conveyed based on what the trust, how it was set up. Once again, I don't want to get too far into this because I'm not an attorney. So you should definitely consult with an attorney regarding that issue.
Absolutely. Anyone else out there have questions about any part of the home buying process? Uh, Anything that you want to know that was not already? And guess what? And sure that each person's contact information is, given so that you're able to, contact them. So we'll start with Miss Kelly. Do you want to give her your contact information?
Okay. You can reach me at 757-660-5401. And you can also Google Kelly Stevenson. And then can they see my name, the spelling of my name right there? Okay.
Yes, they
Kelly
can.
and also on the Atlantic Bay website, if you Google Atlantic Bay and then Kelly Stevenson, my lender page will come up and it'll just tell you a little bit more about me. But feel free to call or reach
Ms.
out
Candace
anytime.
is also asking about hard money loans too. I don't mean to interrupt, but
We my company doesn't do anything with hard money loans. I don't honestly know anything about hard money loans.
a hard money lender is a lender that lends money to people who have loan requests that don't meet specifically what conventional or FHA or different loan products offer. Pretty much in a nutshell, those people, they normally charge a higher rate for the loans, and they normally deal, when it comes to real estate, they normally deal with the people on the investor side.
Okay, awesome. So, if you are looking to get into that sort of situation, Miss Candace, you for a hard money loan, we could definitely turn you into the right direction. Just call us directly. I know that there's a few in the Hampton Roads area that you can possibly work with, but that wouldn't be, a traditional mortgage company like what Kelly does. Those are also for investors, like Kurt had said. Okay, awesome. Well, anyone else have questions that they want to ask? Do we want to ask any questions of each other? Any more information? Any programs out there that anyone want to share about? I know that I found out that some of the municipalities do have some grant money for first-time home buyers. So if you are looking to purchase for the first time, and let me just say this, you do not have to never own a home to be a first time home buyer. Okay, as long as you have not had a home in your name, I believe it's within the past 2 years,
Hmm.
then you are eligible to get the first time home buyer incentives again. So
It's
check with your
3 years
municipality.
for 3 years for Virginia housing.
Okay, so 2 to 3 years. So check and see, what are the guidelines on each one, because some of them are giving up to $15,000 for down payment and assistance for you to get into your first home. Check with your local housing development and see what kind of programs does your city have to help you out.
I did a loan for a property in Newport News where it was a Virginia housing loan, but it was also kind of like coupled with a different grant program. So we were able to get them an interest rate in the ones. And I think the purchase price of the home, the down was a grant for the down payment, which took off 10% on the purchase price of the home also. I mean, I never seen anything like it, but when you can get an interest rate in the ones, that's unheard of. So there's a lot of different programs out there. That was the first one I did, but it was in Newport News, and it's awesome. Like I layered one grant on top of another, and it was awesome.
Yeah, that's amazing. It's all about the knowledge. It's all about having access to people that can give you the information. And that's what we're here to do, guys. We're here to help you, whether you are in this area or not. This information is still applicable to you. And even if you're in this area and are outside of our particular range, we can still help you. We can still give you information. So just know that we're here to be a resource to you. Um, do you want to put your contact information up there, Bert, so that if they need to get a hold of you, they can?
I'm doing that right now.
You want to tell them? Okay, perfect. Well, while you're putting that up there, you guys know here's my number going across the bottom, 1844 to up FICO. If you need any help with your credit stuff, getting yourself in position to purchase, it would be awesome for you to just give us a call and we can start it. If no one else has any questions at this time, please, if you are, feel free to put them in the chat. But if you don't have any more questions, we're gonna go ahead and get ready to that
I do want to remind them of
it's
one
been
more
helpful to
thing.
you. We
Oh,
hope
bless
that
you.
you have gotten.
I know there's like a little delay, but I did want to just chime in real quick and just remind everybody of one last thing that, if this is your first time purchasing a home, obviously, when you do something for the first time, it's not easy, it's scary, but just go ahead and put yourself out there. Do what it takes to be able to be a homeowner and get that investment. Come and speak to me. We'll have a buyer's consultation. So I'll be able to know exactly what you're looking for. You'll tell me just everything. So we'll get to get acquainted with each other, have this buyer's consultation, and I can pretty much hold your hand throughout the whole process if it comes to that, if you need me to. So give me a call, 757-967-7623, and let's go ahead and get this process started. It's 2021, and get your goal of owning your first home.
Miss Candace, thank you for your
Yes.
questions. Thank you for the opportunity.
Serena,
And
I'd
I
also
am
like to
showing
say,
Miss Kelly.
Serena, I'd also like to tell them that,
Yes.
like Kendra said, if that's been a goal of yours, have that goal. But don't wait. If you think you're going to buy in September, October, whenever, go ahead and get started now so you can get yourself in the best position when that time comes. Even if you don't think your credit is there, still reach out to me And let me take a look. Like I said, it won't touch your credit. It won't hurt your credit at all, but it will give you idea where you stand and what you need to do in order to get where you need to be when it's time to buy.
Yeah.
I definitely think that's a good point. That's a great point, guys. It's gonna take some time too to get your home. As they've already mentioned, it's a lot of people buying right now. So you gotta be mentally prepared for it. If you are looking to move by the end of the year, you don't want to wait until the middle of the summer because you gotta factor in the time it's gonna take if there are some issues on your credit that you're not aware of. That might take you a month or two to get that straight. Then you got to look at the fact you got to go out and look for a home. So it might take you a month of looking or maybe 2 months of looking before you actually find something. Then once you find it, you got to go through the process of getting your home inspection, your appraisal, and if there's anything that comes up in your home inspection, getting that repaired. So that could take another month or so. So see how the months are adding up? So if you are thinking about this, like they said, this is the best time to go ahead and get everything organized so you won't be so overwhelmed. You can take your time and go easily through the process. And we're here to help you because we love to help. Okay. Well, if that's it, anyone else have anything else they want to share? Any other good information? All right. Well, thank you guys again for being here with us for our home buyer workshop, Home Buying 101. We will be back. We'll be doing this again. We will bring on other people that are associated with the process, like home inspectors, real estate attorneys. We'll start bringing those people on too, so that way you can ask them the questions that you have. And if you are looking to invest in, we'll get some hard money lenders. We'll get some private money lenders. We will bring them on this platform and we will let them answer all your questions because it's not about one person, it's about all of us coming together because we can do so much more when we are together and we empower one another. There's enough for everybody, there is no lack of abundance. Okay, so thank you guys so much for being here. If you haven't already liked my Facebook page, The Credit Doctor of VA, please go there and like the page so that you can stay up to date with the different events that we have going on, the different resources that we're giving out to the community. And if you have any questions, if you want to get back with any of these presenters, their information is on the screen. And if you don't, you know, keep it somewhere where you can get it quickly. You know, you can always reach out and say, "Hey, Serena, can you give me Kelly's number or Kendra's number or Bert's number or whatever?" They're also on social media themselves. You guys want to give them your social media handles really quick so that way they can follow you as well?
Yeah, on my Facebook, I'm Kendra Lopez Thompson. And you can find me on Instagram at Kendra the Realtor.
I'm Bert, Bert Real Estate Bert on Instagram, and I am Ethelbert Johnson on Facebook.
Kelly Stevenson, if you Google it, I think you probably need to Google Kelly Stevenson Atlantic Bay, and then you'll find the Atlantic Bay webpage. You'll find the Atlantic Bay Facebook business page, and then you'll find the personal page too, Facebook.
Okay, awesome. Well, this concludes our first, actually our second home buyer session, but our first one for this year. And we will be back again. So you guys go out there and make some moves because moves don't make themselves. If you want something different, you gotta do something different because talk is cheap and life is expensive. So what are you going to do? Peace.
Bye.